Hey guys, my name is Colin and this is Colin Talks Crypto. Do you want to make massive profits during this Bitcoin bull run by taking profits at the top and rebuying at the bottom? Well, that's my plan, and that's what I'm going to show you how I'm going to do this. So this is yet another video in my Cash Out Plans series, and this is a very popular series, so I thought I'd do another installment in it. So first of all, I just want to jump right into the first most popular question, which is, why sell at all? You know, like, I'm holding Bitcoin, I'm holding crypto, this is what people say, and you know, why don't I just hold? Because Bitcoin is the future of money, and I know that, and I'm early, and so why even risk? Why risk selling? And the answer is, you can hold if you want to. I'll just tell you from my perspective and my experience. I've been in crypto for about 7 or 8 years now, and this entire video is going to be based on what I'm going to do this bull run. So my perspective is that I already tried the hold method. I tried it through 2 bull runs. I tried it in 2013. I successfully held through that entire bull run. That one didn't bother me so much. But in 2017, when Bitcoin went to $20,000 in price, I held through that as well, all the way through the top, all the way through the bottom. And I suddenly became aware of the enormous amount of paper loss that I was experiencing. Now, I've recovered since then because the markets have more than passed their previous all-time high. But that experience sort of shocked me into, woke me up into the awareness that I could do better. And the purpose of this is not to sell to fiat. It's not to get dollars. I'm on the same page with every other crypto person out there. Dollars are utter trash in the long run. In the long term, holding US dollars or any other fiat currency is a stupid idea. However, I do think there's a time and a place for intelligently using fiat or stable coins or gold or PAXG or other assets, as I'll get into, to turn one's crypto into more crypto. And that's the entire purpose here. Yes, it does involve some level of risk, but I don't think that it's so much risk that it's not worth doing in my case. Nothing in this video is financial advice, and I'm not recommending that you follow me on this or do anything based on any content in this video. I'm just telling you what I'm going to do this upcoming bull run as someone who has experienced 2 entire bull runs, 3 if you want to count the mid-2013 peak up to $255 as its own separate bull run. But I've come to kind of accept that that was a sub-peak, a double top on the way up to the eventual high of $1,150 in December of 2013. So I consider that one bull run, went through that whole thing, both peaks, and the entire 2017 bull run to $20,000. So here's our third one. And I did a good job of holding, but I'm not going to make that mistake again. So with that being said, you absolutely can hold. I've done that before. It's very risk-free, but you'll come to see that you could actually potentially earn 10 times the amount of Bitcoin if you sold at the top and bought at the bottom. Now, realistically, no one's going to perfectly time the top, and no one's realistically going to perfectly time the bottom. However, I think there are definitely profits to be made, especially when you have something as irrationally exuberant as a Bitcoin bull run is. And the halving cycle creates a sort of predictable 4-year parabolic move. And if you look back over the past entire lifespan of Bitcoin, it's basically a concatenation of parabolic moves with higher lows and higher highs every subsequent time. And so, you could just hold, or you could observe that there's a pattern going on, and while it may not exactly repeat, it may rhyme. And that's what we're trying to do, is take profits where it rhymes. And so that's what I'm trying to do with this. So if you want to hold, be my guest. I'm here to make extra profits. I'm here to hold more Bitcoin than I started out with. Plain and simple. I want to double my Bitcoin stash. I want to double my Ethereum stash. I don't want to just hold and have the same amount through the whole thing. So the very first step of my cash out plan is actually a preliminary step. It's just setting things up. It's getting things placed in the right place so that you're ready for the bull run when it happens. Because the worst thing that could happen is suddenly we're upon the bull run peak and you don't have things set up, and you're trying to set up a Coinbase account or a Binance account or whatever, and you have to go through a verification process, and then it takes a week, and then you have to link a bank account, and then it takes a week, and suddenly you've missed the entire bull run. So the preliminary steps before we even cash out are as follows. And I made some notes here just so I cover this in depth with you guys and I don't miss anything. First preliminary step is set up 1 or more bank accounts that are crypto friendly. Coinbase can count as one of these, but have one or more others. And I'm not going to tell you which banks you should sign up with. I personally have signed up with Charles Schwab. Per my own due diligence, I've determined that they are crypto friendly. But there are others out there. Just be careful that you aren't stuck with a bank that is not crypto friendly, because the last thing you want to do is make some massive withdrawal or transfer a bunch of money from your bank account to an exchange. I think that's usually the more risky thing as far as banks go. They don't usually mind receiving funds from an exchange, but sending is where they get really cautious sometimes. And that should become easier because US regulations lately have lightened up on restrictions and actually have made it okay for banks in the United States to allow custodial holding of cryptocurrencies. So it's not even illegal, but some banks may be wary of it, and you don't want to be using one of those banks. So do your due diligence and make sure you have at least one or more bank accounts ready to go that are crypto friendly. The second preliminary step is register on exchanges that allow you to withdraw cash to your bank account. Now, I personally am using Coinbase and Kraken. As an American citizen, those are two that I do have access to. I don't have access to Binance. I'm not even sure what the latest and greatest exchanges are. I just use the two that I've known and that have been tried and true for me. Primarily Coinbase Pro for the lowest fees, and secondarily Kraken as a backup and with other trading pairs. I know that there, I think, is Binance US. I haven't tried it. I don't know that it has that many trading pairs, but if it works for you, do use it, absolutely. Binance is one of those big name brand exchanges. Don't go signing up on some, third world country exchange that you don't even know where it's located. It doesn't have a big track record, just not a secure place to store one's crypto. And we're not going to store our crypto there for a long period of time, but it might end up being weeks or months as we try to get in and out of the bull run, and I'll go into that in a moment. So register on exchanges that allow you to withdraw cash to your bank account. And like I said, you can also use the exchange itself as a form of bank account if it's FDIC insured, like Coinbase. I wouldn't store cash on an exchange that is not insured. It just doesn't feel safe. And we're not trying to store cash on there for long. We're trying to use it as a short-term hedge against the bear market crash so that we can rebuy more crypto than we started, and then as soon as we can, get that crypto off the exchange. We're only trying to keep crypto on an exchange for as little as possible. The goal is not to keep crypto or cash on an exchange. It's just to use it to facilitate the means to our end, which is more crypto, more cash, and get off those exchanges. So that's step 2 of the preliminary steps, is register on exchanges that allow you to withdraw cash to your bank account. Step 3 of the preliminary steps is link your bank account to these exchanges. Like I said, you don't want to be caught with your pants down. The bull run's hit its peak, you're ready to sell, and suddenly you realize, even though you signed up on an exchange, that you haven't linked your bank account and you can't sell to your bank account. Now, maybe on some exchanges you can just liquidate for some other asset like USDT, or I wouldn't recommend USDT personally, or US dollars, but you could still do that hopefully. But really, if you want to be set up well to be able to quickly get the cash off that exchange, or at least some of it off that exchange, to diversify your risk, you're going to want to have your bank account linked to the exchange or exchanges. Hopefully you have several, and then you're ready for that bull run peak. So third step, preliminary, is link your bank account to these exchanges. Sometimes that involves an automatic login process where you type in your login and your password from your bank account and they instantly verify you. Or sometimes it involves the old school method where they send a couple of dollar amounts, under $1, to your bank account, and then you verify how much arrived. And then that proves that you own that bank account. Like 53 cents and 17 cents from Coinbase, you type that in, boom, you've then linked your account, your bank account, to your exchange. So that's the third preliminary step, is link your bank accounts to these exchanges. The fourth preliminary step, and then we'll be ready for the cash out plan, is to have high enough limits approved on your exchanges. This depends on how much crypto you're trying to trade and how much you anticipate selling. If you think that Bitcoin's going to do another 5x to 250,000, and let's say you hold 3 Bitcoins, make sure that you can actually deal with about $750,000 of Bitcoin transactions on that exchange. Some exchanges have different digital asset limits versus fiat withdrawal limits or deposit limits. So just make sure that your limits with whatever you're dealing with are enough to facilitate what you need. If you ended up selling those 3 Bitcoin and you hit the top perfectly because you're an awesome badass, and you had $750,000 in your bank account from those 3 Bitcoin, and then the bear market crashes, and you suddenly find that you can't even withdraw that money because you have a $10,000 withdrawal limit. You don't want to be in that situation. You want to then have already upped your limit to like $250,000. So it only takes a couple of transfers off the exchange to your personal bank account. And you can keep some of it on the exchange, but I don't recommend you do that. I think it's best to really have one's assets diversified and distributed amongst as many different platforms and bank accounts and assets as possible for one's own peace of mind, because maybe one goes rogue or goes corrupt or has an issue or a security hack, and then if you have your assets in one spot, you might have just lost it all. But if you have it in 3, 4, 5, or 10 different places, you've reduced your risk that much. So I highly recommend redundancy, not only in number of bank accounts, but in number of exchanges and number of assets. So that's the fourth and last preliminary step. It's have high enough limits approved on your exchanges for both fiat and for digital asset trading and withdrawal. Withdrawals most importantly. So those are the 4 steps of setting up yourself to be ready to cash out and take profits at the top of this bull run. Boom, chains of setting. My head was roasting and my feet were on fire, so I had to find a more shady area. So let's get into part B of this video now. Part B is the price points and the methods of cashing out. In the past, I've shared the Bitcoin bull run price increases from peak to peak. In 2013, we had a 37x. I'll put the chart on the screen so you can see what I'm talking about here. In 2017, we saw a 17x increase from the previous peak. And currently, we don't know exactly what peak to peak increase multiplier we're going to see. But if you take the conservative estimate and you take a decreasing trend from 37 to 17, it's reasonable to assume a low-end conservative expectation might be an 8x increase over the previous all-time high of $20,000. 8x of 20,000 is $160,000. So I'm personally using that as my beginning cash out plan price point. Some of you might want to have a more aggressive cash out plan price point, and that's completely up to you. For myself, I've waited 3 bull runs now to cash out, and I don't want to miss this one. And so for me, that's a good starting point. Now you can model my strategy after your own price point. Let's say you want to pick $250,000 as where you think the peak is going to go. You can just scale my numbers back from $250,000. And you can do that for any price point that you want to pick. And I'm not going to tell you what you should pick because I don't want to be responsible for you missing the bull run or doing whatever, screwing something up. I'm responsible for my own money and you're responsible for your own money. So think of the price point that you think that Bitcoin's going to go to. Get that in mind right now. Now mine is going to be at $160,000. And I'm going to scale back from that. And the cash out approach is to incrementally sell in percentages on the way up to that peak, because I think that's going to be the top, right? If you think 250,000 or 300,000 is going to be the top, use that as your peak point and scale back from that. So for me, I'm going to start taking profits at $120,000 per Bitcoin. And I'm going to sell about 10% of my portfolio at that point. And if the Bitcoin price goes to $130,000, then I'll sell another 10% of my portfolio. If the Bitcoin price goes to $140,000, another 10%, $150,000, another 10%. And when we finally hit my peak estimate of $160,000, that's where I'll take the last 10%. And I may scale it so it's 10%, 10%, 10%, 20% back from the peak. So if you picked $300,000 for your Bitcoin price peak or $250,000 for your price peak, you'd scale back from that. So for $250,000, you might want to take some profits 10% at $200,000. And then at $215,000, take another 10%. And then at $230,000, take another 10%. And then at $250,000, take the final 20%. And the reason for scaling into it is because we don't exactly know where the peak's going to be. The whole thing is honestly a big guessing game. And we're using as much metrics and history to intelligently predict this as possible. And that's why I've created the Colin Talks Crypto Bitcoin Bull Run Index. And if you haven't seen that, look up my previous videos and I'll be keeping those coming to help us really feel like we know when we might be reaching the peak. And so using that tool, the CBBI, the Colin Talks Crypto Bitcoin Bull Run Index, in conjunction with this cash out plan, I think that we can have our best shot at taking maximum profits. And you can scale it however you want. If your Bitcoin price peak is 250,000, you could start taking profits 150,000. Maybe you're not as confident that it'll reach 250,000. And maybe your life situation is different than mine. Everyone has their own financial needs and their own situation. Maybe you have a big college debt you have to pay off, or a mortgage that you want to pay off. Or maybe you've been in the game for so long that you finally just want to take some profits. And so you're not willing to be as risky about taking profits as you would otherwise be. And so it really depends on your life situation. Maybe 2017 was the first time you got into Bitcoin and you've been underwater for so long, you'd just be happy to break even. You can have almost any kind of situation. And so tailor the bull run to your risk tolerance and to your personal life situation. So that being said, that was all for the Bitcoin scaling out plan. Altcoins are going to do their own thing. And historically, altcoins tend to moon and peak later than Bitcoin. I feel a little nervous about waiting past the Bitcoin bull run to start taking profits on some of my altcoins, but that's what's happened. And so I think that I need to remember that lesson in 2017, which was that Ethereum and Ripple peaked out about 2 to 3 weeks after Bitcoin did. And so if we take that lesson, we repeat that, and we wait to take profits on altcoins later than we wait to take profits on Bitcoin. So I haven't exactly mapped out how I'm going to do that particular strategy, but it might be something like after we've taken our first 10% profits on Bitcoin, we wait another month or 2 months to take our first 10% profits on altcoins. Or it could be scale out a Bitcoin until we hit our price target and don't even sell any altcoins until after our anticipated final peak, and then take profits on altcoins because we know that those are later than Bitcoin. You can take whatever plan you wish to do. I'm probably going to scale out of altcoins similar to how I scale out of Bitcoin, which is 5 or 10% at a time on the way up to a price target. And with altcoins, I might do it a little later than my Bitcoin sells because of the delay. So that's the scaling out approach. Next, we're going to get into what am I going to scale out into. So as we've said, you've already prepared yourself, you've got your bank accounts ready, you've got your exchanges ready, you've got your limits maxed out so that you can withdraw your crypto if you need to. So what are we going to do? Are we just going to keep all of our money on Coinbase, on one exchange? Or are we going to do something else with it? I'm going to do something else with it. So here's what I'm going to do. And this is tentative. I might change this as I get closer to the bull run peak and as I feel out the different stablecoin options or gold or silver options and things of that nature. So right now, my plan and what I've got written down here is I'm going to take 40% into cash, 40% into stablecoins, and 20% into gold. And the purpose of that is to get me from the bull run peak down to a bear market low where I can rebuy more crypto. And that's the only purpose for doing this. Now let's get into some of these categories. Cash, spread this across different bank accounts. For example, spread it across 3 different bank accounts. A third of this could be on your Charles Schwab account, a third of this could be on your Wells Fargo account, your Bank of America account, or your Coinbase account, etc. Make sure they're all crypto friendly before you go withdrawing your funds to those accounts. So make sure they're crypto friendly, as I said in the preparation step. So spread it across basically as many different bank accounts as you can so that you can sleep easy at night, knowing that if one of those seized your money for some reason, you wouldn't be totally ruined by it. I really would recommend you don't keep it all in one place. And even 2 places, depending on how much money you have, is probably too little of a diversification for your cash. So to summarize, 40% of my cash out profits are going to go into cash itself, to fiat. And again, I don't like fiat, but I'm using it as a tool. Fiat is a less devaluated tool in a short period of time than a bear market crash. To give you an example, a Bitcoin bull run crash could be 85%. It looks like my camera shut off mid-recording, so I'm just going to record this again with audio. So as I was saying, a Bitcoin bear market crash could be as high as 85 or 90% from peak to valley. Let's say that it's going to be a more conservative 80% drop this time around, because the halving event is less impactful every time. 80% in a matter of 3 or 6 months is far less than the fiat loss of value, loss of purchasing power that is experienced over that same 3 to 6 months period. Even with today's rampant inflation, inflation's higher than ever, money printing's higher than ever, but even so, it's a common question I get, like, why would you use the dollar? The dollar's totally inflated and worthless. Well, yeah, but it's actually going to hold value better than Bitcoin during a bear market correction. So you have to use it as a tool intelligently. I would not use fiat to hold value any longer than 1 year, ideally. And really, optimally, it's like 3 to 6 months, because you are going to have your value eroded over time. I think one of the stupidest things one could do with a bunch of dollars is just keep it as dollars for like 10 years, because you're going to just erode that value. And I would put that into Bitcoin or Ethereum or some other cryptocurrency. But On a short term, the dollar is going to lose less than Bitcoin in a bear market. And that's the key thing here. You're using the dollar's ability to hold value better than Bitcoin during a bear market to your advantage for the sole purpose of acquiring more Bitcoin at the end of the bear market. And that's the only purpose. So really, you're just looking at it as a tool to achieve your end of holding more crypto, not holding fiat in and of itself. So hopefully that answers some of your questions, because I've noticed that some crypto holders get a little sensitive to the subject of using fiat, but really it's like using it to your advantage when you need it. So a Bitcoin bear market crash, I think this time is going to be about 80%. And anyone telling you that there's not going to be a bear market crash right now, I think is grossly misleading you. A bull run is an irrational exuberance in price. And every bull run that we've ever had has been followed by a bear market correction in price. It's just the nature of irrational exuberances. By the sheer nature of the word irrational, it's not the correct market valuation for a price. So if you have a Bitcoin price around 3,000 or 5,000 at a bear market low and it goes to 200,000 in a very short period of time, then rest assured that's probably irrational. And probably the mean or the average of what the price should be is more like $40,000. And that's what I anticipate the next bear market low to be. So anyone telling you that there's not going to be a bear market correction right now, I think is doing you a disservice, because they're setting you up for failure. I think the chance of there being a bear market correction after this bull run high is far greater than there not being one. In fact, I give it like 95% chance that there's going to be a significant bear market correction of greater than 60% and probably as high as 80%. So I think there's like a 5% chance or less even that there's not going to be a correction. It's just not how markets work. Anyone telling you that doesn't know what they're talking about. That's not how markets work. So don't listen to someone telling you that there's not going to be a bear market correction, even when they say that, oh, there's more institutional money than ever before, or there's more corporations than ever before. That's always the reason that's given. This time it's different, quote unquote. I hear that so much. This time it's different. I mean, yeah, sure, it's different, but there's going to be a correction. It's not like irrational exuberance doesn't need a market correction. So that's my 2 cents on that subject. Be very wary of someone telling you that there's not going to be a correction. They're probably misleading you. And there's a lot of YouTubers out there who are just so starry-eyed and so over bullish, like to the point of irrationality, that they'll make stupid claims like that and tell you that this is a super cycle. There could never be a correction after a super cycle. Yeah, give it a rest. There's going to be a correction. I would put my money on it. And I guess I am putting my money on it because I'm doing a cash out plan based on this exact phenomena that I anticipate happening. Because if there wasn't going to be a correction, then why would you cash out? So I'm putting my money where my mouth is. Feel free. Any of you guys who think there's not going to be a correction, just hold your Bitcoin through the whole bear market. You know, like I said, I've been there, I've done that, and I've regretted it. I've come out wishing I had had that extra 10x of purchasing power that I lost during the bear market. So there you go. That's my views on the subject of, is there going to be a bear market correction? And I'm going to just finish up this video. I can't remember exactly what I said while I was having the video recorded, but basically 40% of every liquidation, of every 10% liquidation on the way up to my price point goes into the different categories of cash, gold, and stable coins. And also the subsets, like for stable coins, it's DAI and USDC. And for cash, it's like 3 or more bank accounts. And for gold, it's PAX G token and maybe physical silver or physical gold as well. If you wish to do that, you can. I personally won't be doing that because I've had such a hard time with physical gold in the past. So to give you an example, play by play, let's say I anticipate the Bitcoin bull run peak at 160,000. So I decide I'm going to start taking my first 10% of profits at 120,000. And let's say we reach that 120,000 Bitcoin price point. I then liquidate 10% on probably more than one exchange. I'll do 5% on Kraken, 5% on Coinbase Pro, or something of that nature. Then when I have that liquidated, I'm going to withdraw that. I'm going to keep 40% of that in cash, and I'll divide it amongst the exchange itself and then my bank accounts, so it's evenly distributed. I'll take 40% of that 10% and I'll put it into stable coins. And I'll put half in DAI and half in USDC. And I'll take 20% and I'll put it into gold. And so every time I'm doing that, I'm not just doing one category at a time. It's not like I just keep it all in cash or all in gold every 10%. I'm distributing it every single time. So then when the Bitcoin price climbs from 120,000 to my next price point of 130,000, I take another 10% profits. I sell 10% of my Bitcoin and liquidate that. And then I apportion that accordingly. Again, 40% of that goes into cash, 20% of that goes to gold, 40% of that goes to stablecoins, and so on. Then Bitcoin goes to 140,000. I split it up again. 150,000, split it up again, 160,000. At that point, I should have 50% of my crypto sold. And of the entire amount I've sold, 40% should be in cash, 20% should be in gold, and 40% should be in stablecoins. And I may tweak those numbers as time goes on, but that's my current plan as I have it written down here. It's not to hold fiat. It's not to hold dollars. It's to buy back into more Bitcoin and more Ethereum primarily. And if I want to get some altcoins in the future, I may. But really, to me, Bitcoin and Ethereum are the two dominant forces in the crypto game. And I see those as being safe bets for the long run, like 10 years or longer. So like I asked myself, what cryptos would I be willing to hold for 10 years or longer? And to me, it's really just Bitcoin and Ethereum. You know, Bitcoin Cash might have a chance. Some of these others might have a chance. But the two I feel most confident about, given their market caps and their adoption mostly, is Bitcoin and even more so Ethereum. So guys, that's what I've got for you today. If you found this useful, please share this with your friends. Please do me a favor, if you would, in exchange for this entire video, just smash that like button and drop a comment. I would really appreciate that. And I wish you the best bull run, and I'll be here with you up the whole way, charting it, plotting it, doing Colin Talks Crypto Bitcoin bull run graphs, and I will be with you dropping videos and sharing with you what I'm doing on the way up. But make sure you make your own educated decisions, because this is your bull run too, and you have to be responsible for your own money. So have a great day, have a great bull run, and I'll talk to you again soon.